Good morning, retail traders. It is Saturday. Today's date's October the 1st, 2022. And are we in a bull or bear market? Well, we're definitely in a bear market. Once we busted down that 330,000, that brought us in bear territory. And it's going to be hard to get back up there again. And I'm going to show you a couple of ideas. I'm going to talk about the Dow only today. I'm calling for a lower support. Subscribe if you get a chance. Ring that bell for future notifications. If you ring that bell, I'll pop up there and you can watch my little short videos on my updates. And they're real good supports. I love catching knives. I've been at it for a very long time. I'm a trading strategy. I'm a price action trader. I'm not a fundamental trader. All I need to know is the charts and the price of the stock, and I need to be in the now. I got 5 steps I take for my sneaky snake trading process. I did develop a trading strategy last year. I have many. I have a lot, but I really went into an expansion on trying to figure out how I can stay into trades longer and how I can get out early and scalp and be out of here within the first hour and be done with it. But I choose to stick around and run a Discord room with a lot of other good traders that are involved. And there's a couple of good ones in there that are better than me. So let's go ahead and bring that down. This is called a bear, and that's called a bull. Usually I'm a bull. I'm a bull at heart. I can take any dip and trade it, but I'm definitely going to fall into the bear camp from now on. Once we busted down that 30,000, I became a bear. A little teddy bear. So this is the development that I have. It's called the Sneaky Snake Trading Strategy. I look for price action, I look for chart patterns, and I use my moving averages when I'm trading. And in this case, I've added a new moving average to it, and that will be the 81 EMA. I was practicing with a 51 EMA and I accidentally put the wrong number in. So there for a couple weeks I'd spit out, I'd say I'm in the 51 right now, and it would be the 81. And that 81, I noticed on the monthly chart, we came down and pulled back to it. And if I turn this to the quarter, we hit that 51 on the wick. But down here, when we had the crash of Obama, we hit that 81. And that could probably be right around the 100 EMA if it come down to it. So we're going to pull this back on the monthly. And then we've got this little snake development, upward trend, and we've pulled back to that bottom channel. So my next support I'm going to call is going to be off this 81 right here. And that's right around off the top of this ascending triangle. So if I clear this up, you've seen what we've done here. We've hit the bottom of the channel. So if this doesn't hold Monday, still might be able to scalp it up a little bit. Takes a headline, we could have a real nice green day. But I would not hold it overnight. Not in this market. Not with our geopolitical tension that's going on with Joe Biden or Brandon, whatever you want to call him. I don't want to call him a president, that's for sure. Because he has no clue what he's doing. He's too old, he's too senile, and he's got Alzheimer's. So this goes back down to that bottom chart, which is right around, nothing against Alzheimer's. Nothing at all, but there's a time where you got to give. I'm a baseball player. I played baseball until I was 40 years old, and then realized when I tried to play it at 45, 50 years old that there's no way I could play baseball again. I woke up, I was sore for a week, and I gave up my mitts and bats, and so 28,778.33. Mark that down. Then I'm going to clear this up. I got 3 different patterns I want to show in here. The second one was the ascending triangle. And that's where I called that last video out for support level. And that's right here on the bottom of these candles, right about in here. Right around 26,600, 26,700, somewhere in that area. And that's right there on that 81 EMA. So that's going to be our next target. Now this is the monthly chart. I can short the market to 27,000, and I think I'd be fairly safe. This is an ascending triangle right here. When I'm doing the strategy, I'll trade off these triangles. That's one of my best patterns right there for a breakout. Usually comes out on the triple top like it did right here. Boom! 1, 2, 3, bam! Just run on up. Came back, we had that COVID crash, and then it run back up again. So we're going to get down to them COVID lows, or we're going to find that 81 that we bounced off right here. So that's the ascending triangle. The next pattern I want to show you is called an expansion pattern. That's when you run that trend line to that next body of that candle right there. Try to get as precise as you can, extend it to the right. And there you go. We're right on top of that resistance line again. So that's a double confirmation of the expansion pattern. Megaphone pattern, blowhorn pattern, whatever you want to call it. And that runs right into the 200 SMA. Now stuff can get real bad. If we get nuked or we go to war, we could have a nice little flash crash back down to 18,000. And I'd load the boat from there. Now the talking heads on CNBC, I've only heard one analyst said he's 85% cash, and they all probably are. Most of them are saying this is a great opportunity to buy the dip. I can't say that because I trade on politics, because I know politicians can run them algorithms in a speech. They don't mention it that much, but I've watched this market every day for 19 years, every day. And I used to have CNBC pump station up on TV up on my left, and I'd listen to them all day, and they were worth listening to at one time. But these days, they got too many virgins in there that didn't live, that weren't living back during the Obama. They weren't even alive back during this year of 2008. Some of them were just babies, still in grade school and high school. But I was here. I was here every day watching this crash. I was here when we had the .com bubble. I was here when we had the COVID crash. And I'm here now because we're having the Obama crash. I mean, not the, well, it's true. He's probably running the country. Brandon crash. So if we don't bounce off the top of this blowhorn, we got two confirmations. We could find a pivot point area, and I can lower that 26,000 that I have at the 81 to this pivot point that's inside of this pattern. And I'm going to draw that in. It's all about patterns. I've studied these patterns for over 20 years, 24, 25 years, since 2004. 2004, so every bit of 20 years. Or longer than that. Heck, I don't even know where we are these days. But that's a beautiful pattern right there, and that's a beautiful support right at 24,759. So don't come in here very bullish unless you can hear the talking heads, saying they're buying up, they're buying up, they're buying up, But we've been in nothing but a downhill battle right here. So my next support, if we do not hold that 81 at $26,898, around 27,000, we'll drop down to this 24.7, 24.8 area. And that'll be the pivot point in this expansion pattern. Now I've traded these patterns many a times, And I've got one thing to say. When you hit a triple bottom, you're going to have, it's always in threes with me. 1, 2, 3, we had the breakout. 1, 2, 3, we had the breakout. But this was COVID. And right now, I think what we've got in office is worse than COVID. So our next support level is going to be the 81 EMA at 27,000. And if we don't hit that, if we hit that and we keep going down, we're going to try to hit the pivot point. And that's at $24,800, rounded up to the top. And we could keep going down. And we keep going down. And hell, if it's something real bad happened, we could hit that $20,000 benchmark. I mean, and that's that 20,000. I called that back when Obama took office. And I said we were going to get to 20,000. And that's what we did. We hit 20,000. He got out. Trump came in, ran the market up. Then COVID hit. And now we got Biden in here. He ran the market up there for the first half until the war broke out. And now we're in that war. And if Putin keeps threatening us, that's still going to be an insurance marker that we can still keep going down. I've been through a lot of chaos with wars and stuff. We had Libya, we had Afghanistan, we had Kuwait, but they didn't really break down the market. But this is different. This is different. So we'll see if we hold this support level. If not, we'll hit the 81 EMA, and if that don't happen, we'll hit the pivot point. And that next support will be 25,000. And that's it. Please subscribe, ring that bell, and be a bear in this market, and have a great day.